This week's number, 31. The world's oldest dog, Bobby, just turned 31. More than 100 people attended his birthday party in Portugal. True story, when my girlfriend's dog died, I got her an identical one. And she said, what am I going to do with two dead dogs? Welcome to Prof G Markets. Today, we're discussing Mercado Libre and Alibaba, share buybacks, and the market impacts of an aging population. Here with the news is non-pet owner and Prof G media analyst Ed Elson. Ed, you don't have any pets, right?
No, I used to have a dog, but he died.
Well, I'll get you an identical one. What kind of dog did you have?
Yeah, thank you. I had a border terrier.
Nice.
It's a Scottish dog.
And you grew up with a dog.
That's right. But he wasn't the best dog because he would attack other dogs, and he would not play fetch. He was kind of like a pretty bad dog, to be honest. I wasn't that close to him.
Well, that's you know what? That's just a charming experience, Ed. That's a great story. You and the story, I love how you shitpost your dead dog. That's really touching.
Yeah.
All right.
I'm just trying to be as transparent as possible here. That's what we do.
I appreciate that. Anyways, break down the headlines for us, Ed.
Let's start with our weekly review of market vitals. The S&P 500 was up, and gold sank as the dollar gained. Shifting to the headlines. The European Union approved Microsoft's $69 billion acquisition of Activision Blizzard just weeks after the UK blocked the deal. Qatar has thrown its hat in the ring to host the 2025 Rugby League World Cup, its latest bid to attract global business through sports. Vice officially filed for bankruptcy, as we anticipated a couple weeks ago. What's curious is that it was one of 7 companies that filed for Chapter 11 in just 2 days. Montana is banning TikTok. The law will go into effect January 1st and will block the app from operating within state lines. It will also penalize app stores if they make it available for download. And finally, OpenAI founder and CEO Sam Altman testified before Congress on the state of AI. He urged members of the Senate to regulate the technology to avoid causing, quote, significant harm to the world. Also on the panel was Gary Marcus, Scott's colleague at NYU and the host of the Humans vs. Machines podcast. Marcus is one of the most vocal critics of AI and has raised the alarm about the threats he believes it poses. Mia spoke with him after his testimony, and he believes that when Altman called for regulation, he meant it. For more of Mia's interview with Gary Marcus, check out our special episode on YouTube. Scott, any thoughts?
Well, I just feel as if we've been to this movie before, and I don't doubt he was sincere. I don't doubt that Sheryl Sandberg was sincere when she said,
we're open to regulation. We work with lawmakers all over the world.
I don't think Zuckerberg was insincere.
I think the real question, as the internet becomes more important in people's lives, is what is the right regulation, not whether there should be or not.
You as a company welcome regulation?
I think if it's the right regulation, then yes.
Sheryl called for more government regulation in June of 19. Google CEO Pichai said companies such as ours cannot just build promising new technology and let market forces decide how it will be used. Said that in June of 20. I think Twitter's CEO Dorsey probably meant it in April of 19 when he said.
So generally, I think regulation is a good thing. It's a net positive, and I think our role as a company should be that of an educator, helping regulators and legislators understand what's happening with technology.
Nick Clegg in October of 2020 said, much has been said about Facebook recently, but there's one thing we agree on. Congress should pass new internet regulation. Now, let's be honest, he wasn't sincere. I don't doubt it. I think it goes to something much deeper, and I'm cynical around this. Mm-hmm. Everyone I know that knows Sam Altman says he's a good guy. I think he's sincere now, but I think to be a billionaire in the United States is to be loved. And I think slowly but surely, the incremental road to hell is, okay, we're good people, we'll figure this out, and also we have the opportunity to make tens or hundreds of billions of dollars, so I'll incrementally start making a series of decisions that maybe ignore or delay and obfuscate an attempt to push back on our firm's profit-making ability because they're worried about it. But don't be worried, because at the end of the day, I'm a good guy. And I've just seen this happen over and over and over. I don't think these people went into these companies as bad people. I think slowly but surely they figured out reasons why I embrace regulation, just not this regulation. So I hope I'm wrong. There's some evidence here that maybe we're taking a different tact with AI. But there are now 3 different types of regulation that have been proposed recently. I mean, there's Amy Klobuchar's antitrust regulation. There's Senator Bennett's proposed regulation around a new digital czar. There's Senator Warren's Restrict Act. And nothing ever fucking happened. So the other weapon of mass distraction being deployed here is OpenAI referring to themselves, or constantly saying that they're governed by a nonprofit body. They really shouldn't say that, because it's really not true. I think the money goes back to the nonprofit after the original investors get, I think it's 100 times their original investment. I think we did this calculation that the first 80 or 90 billion in profits go to investors and management and Microsoft, meaning that until this company is one of the 5 most profitable companies in the world or in history, it effectively is a for-profit. So I don't, look, I hope I'm wrong. I hope that Congress acts, and it's not his fault. I'm sure he's earnest. The onus is on Congress to actually create some sort of regulatory body. I think there should be one under NATO, because I do think there's a need for multilateral cooperation. But I'm sort of like in the show me phase. What are your thoughts?
Well, I was really interested in his reaction with in his interaction with Senator Kennedy, where Kennedy asked him, "Do you make a lot of money?" And he said,
You make a lot of money, do you?
No. I'm paid enough for health insurance. I have no equity in OpenAI.
Really?
Yeah.
That's interesting. You need a lawyer.
I need a what?
You need a lawyer or an agent.
I'm doing this because I love it.
was a pretty viral clip. It sort of shut Kennedy up. But what do you think of that? Do you think that is also a distraction? I mean, he's very rich, that's for sure, but he's not rich from OpenAI.
I think that's a great counter argument, and I hope I'm wrong, and I hope that Congress acts on this quickly. I think that they feel like, we won't be fooled again. Fool me once, shame on you. Fool me twice, shame on me. I think they've been fooled about 7 million times by these people. So I hope they move quickly. I don't doubt Sam Altman's intentions, but there's just our ecosystem just sets it up such that ultimately over time, they find really good reasons to delay and obfuscate around regulation, and we end up with technology that has externalities, that has absolutely no guardrails. And we wrote about this last week. There's a lot of things they're not thinking about. We're raising a generation of people who have digital relationships with Netflix, with Tinder, with porn, with Robinhood, that are reasonable facsimiles of work or some type of relationship, where the net result is they're not actual human relationships. We're mistaking friends for friendship. And I worry that OpenAI is going to create a series of, near relationships where you can have a girlfriend, a friend, a mentor, a boss, an advisor who's actually not a real person. So you don't have to take the risk of the pain and coordination and difficulty of trying to establish real relationships in the real world. But there needs to be a regulatory body formed immediately, and it's the onus is on Congress to act. And then we're going to see, once some sort of regulatory body is approved, whether or not Mr. Altman is actually sincere, or, as is usually the case, they come up with good reasons why they warmly embrace and welcome regulation, just not this one. So I hope it happens. So. Anyways, we'll see. So on Montana, that's not a state's job. I want TikTok banned. It's not a governor's job to ban media companies. Governors are it's an operational role. I've never understood how Senator Rick Scott can be governor and then senator and claim that he's interested in the role. He's just interested in power, because the two are entirely different positions. One is a legislative lawmaking position, senator. One is an operational role. You're the CEO of the state, and you're meant to make sure that the trains run on time and the police force and the fire department show up when you call 911. And I don't think a governor he's kind of making it probably more difficult for federal legislation, because it'll probably be overturned in court. It's grandstanding. Every governor wakes up, looks in the mirror, and says, "Hello, Mr. President," and then tries to inflame the crazies around the nation to raise money and get a call that you're a principled weirdo and you should run for president. It's just total posturing. It's what Governor DeSantis is doing, passing legislation, telling principals and teachers what pronouns they can or can't use in schools. That's not what a governor is supposed to be doing. And I do think TikTok should be banned, but that's not a state issue. We can't go state by state banning media. A governor is a CEO. It's an operational role. Mm-hmm. And they're essentially just supposed to improve the quality of life. Because when Governor DeSantis takes on Disney, it's like, well, okay, if Governor DeSantis had said, look, let's talk about the giveaways in the special districts for companies in Florida, and it had systemic change around tax credits. It said, look, we can't just keep buying companies or corporate grift or corporate welfare. That would be a legitimate conversation for a governor. When a governor decides that he doesn't like Disney being celebrating its LGBTQ employees, that has nothing to do with the state. That's not your ballywick boss. You're clearly, again, just posturing for Fox and your right-wing crazies. So I don't think we have an effective. I think these governors, it's just whatever you want to call it, legislative or. I think they're overstepping their boundaries. Let's talk about Vice. It's shocking that it took this long for Vice to go away. Do you watch Vice? A lot of young people love the content on Vice.
I never watch Vice.
You never watch Vice,
but I know people who do.
Vice? You do know people. What do they like about it?
Yeah. I mean, it's just insane. It's like, oh, I went to the jungle and took ayahuasca with the indigenous people, and it's like a combination of drugs and liberalism in this weird posturing way. I don't know. I've never been interested in Vice. It feels like they just create the most absurd headlines as possible to get clicks. I know that that's what most news organizations do, but Vice takes it to another level.
I mean, this is an indication of just how difficult media has become. I mean, they've been trying to sell it for a couple of years now. And I mean, this is kind of an ugly indicator, forward-looking indicator of these startup media companies. Qatar throwing its hat in the ring for the 2025 Rugby League World Cup. You're going to see more and more of this, because if you want to burnish your image as a nation, you can run those ads on CNN saying, come to Malaysia, do business in Malaysia, right? Have you seen those ads on CNN International that promote Taiwan as a great place to do business?
Just the country. Yeah.
That is probably effective, makes you feel better about the country, right? But it costs money. Well, what if you could do something, run an ad, 80 times a year that reached hundreds of millions of people, and it did cost in the short run, but in 10 years, you could sell all of those ads for more money than you paid for them. That's called a football team. This is kind of the best branding move, because you buy Manchester City and people feel better about your nation. And then in 10 years, should you decide to, you can sell it for a lot more than you bought it. So you're going to see, the term is sports washing, but you're going to see this everywhere. You're going to see an enormous acceleration in the value of these companies, and we're already seeing it. And then probably the bigger news in business that won't get a lot of attention because it's boring is the EU approving Microsoft's acquisition of Activision after the UK blocked the deal. And I think basically the EU said, hey, you Brexit-loving bitches, we're on top. And they basically said, we're approving the deal. This probably means the deal goes through. This is a huge win for Microsoft. I think they've said for the next decade, you have to agree to put, ensuring your games are available on other platforms, just not Microsoft platforms. But this probably means the deal gets done. This is a big deal.
Interesting. Okay, let's move on to our first story.
Dog killer. I'm sorry, go ahead.
Two e-commerce giants recently reported earnings: Argentina's Mercado Libre and China's Alibaba. Mercado Libre, known as the Amazon of Latin America, saw significant growth in gross merchandise volume, up 43% year over year. Meanwhile, earnings per share came in at $3.97. That was 30% higher than analyst estimates. Alibaba missed expectations on revenue and EPS, but it announced it will spin off its cloud division as a separate publicly traded company. Scott, that's something you've suggested Amazon should do with AWS for a while now. Now, we spend a lot of time focusing on Amazon, but we rarely look at its international competitors. Scott, what are your initial reactions to these earnings?
So Mercado Libre is probably the most impressive company. Would you say that? Probably in Latin America. It's really well run. The revenue grew 78% in 2021, 50% in 2022, and 58% in Q1 2023. And this is off a big base. I mean, this company is, kind of the little Amazon that could. Their operating margins increased from 3% in 2020 to 10% in 2022 on the integration of their ad network. And this is several times higher than Amazon's operating margins. And it's profitable. And again, see above 58% growth in Q1. That's just striking. Mercado Libre, you would argue, is a teenager, not a mature adult like Amazon right now. But it's doing incredible. Amazon went public in 1997, Mercado Libre 10 years later in 2007. In terms of value, Amazon trades at 25 times EBITDA, and Mercado Libre is at 38. So the market has reacted. The one that's probably the value here is there was so much overhang, even with their recent run up. There's so much overhang on Chinese stocks because of the CCP's involvement and willingness to just shut companies down overnight. Alibaba only trades at 12 times EBITDA. So that's probably if you were looking for a value play. But we spend so much time talking about Amazon, we don't talk about the other guys. And I think Alibaba spinning its cloud unit is exactly what Amazon should do. I wouldn't be surprised if at some point that cloud unit is worth more than Alibaba itself.
Yeah, you mentioned the sort of government risk discount that you're seeing with Alibaba at 12 times EBITDA. A couple things. One, when you say that's a buy, are you basically implying that you don't feel that the risk is that urgent? I assume the reason that the 12 times EBITDA multiple is there is because they're pricing in that government risk. And then the other side of this is Mercado Libre, which is based in Argentina, but there's also government risk there. I mean, the Argentinian government has defaulted 9 times on its debt, most recently in 2020. There's this really long history of government corruption. I saw that just a few months ago, the country's vice president was sentenced to 6 years in prison for fraud. Do you not think that government risk and our lack of ability to trust these governments is something that investors should be thinking about when they look at these stocks?
It's absolutely something they should be thinking about. And I mean, the play was to buy Alibaba, I think, in November. And since then, I think it's up 50 or 70% when it was trading at 7 or 8 times EBITDA. And people thought, well, she and the CCP have basically decided that, capitalism and their thoroughbreds, these amazing companies, are there. I mean, in the U.S., we basically err on the side of the private sector. We have a ton of respect for companies, and we let our horses run, so to speak. In China, they were doing that. China's a much different place than it was 10 years ago. And then she came in and said, yeah, fuck that. You want to shitpost me? I'll disappear your ass, and you can show up painting in Tokyo. And, we think you're bad for middle class in terms of this huge tutoring industrial complex. We're just going to shut you down. You don't want to share your data? You don't want to share your data, did he? Fuck you. We're going to put you out of business. So, and here we have laws and senators who like to claim they're pro-business and want to protect the private sector and say this is the engine of growth. This is what makes America great. The call we made, and we actually picked Chinese internet stocks in our predictions deck in November of 2022 as being the best performing sector, and we got that right, was because I don't think I think he's going to cut off the fingers, but I don't think he's going to cut off limbs of his thoroughbred, so to speak. And I think that the private sector kind of got the message and said, okay, let's be honest, he's in charge and the CCP is in charge. And now these companies are, have had huge run-ups. And even though it's at 12 times, it was at 8 times. So the question is, do you think they're going to come in and, pull another like heavy-handed move? The market is clearly saying, I don't know the dynamics between the Argentinian government, which has proven itself incompetent. I don't know if Mercado Libre basically has its own government and is able to, for whatever reasons, the market just doesn't see it as a risk. They see Mercado Libre as bigger than the government, as doing its own thing. I don't know, politically connected. I don't know what it is, but it doesn't appear to have slowed it down at all. So, but absolutely government risk. One of the reasons that the S&P always trades at, or typically trades at a higher price to earnings multiple than other markets, is people do have a lot, when I say people, investors globally do have a lot of respect for rule of law, think that you can't have an event where all of a sudden one guy, she, moves in and kills a company, that we have, due process, and as a result, capital flows into our market like no other market in the world. But to return to Alibaba, I think it was that was an unbelievable buying opportunity, because the CCP still wants to bring tens of millions of people out of poverty. Otherwise, they have a revolution on their hand.
Yeah, it's interesting. It feels like, you talked about how the U.S. is valuing the private sector. It feels like there's this feeling that the U.S. will do anything it can to protect multiples, and China just doesn't give a fuck. So what? Alibaba's at 12 times and Amazon's at 25 times. But it's interesting. We'll keep track of it. Let's move on to our second story. As we discussed on an episode last September, there are two main ways a company can return money to shareholders. The first is a dividend. A share of the company's profits are distributed to shareholders on a regular basis, usually every quarter. And the second is a share buyback. That's when a company buys its own outstanding shares, which reduces the supply of shares on the open market and thus increases the share price. Now, historically, dividends have been more popular, but recently that started to change. Over the past decade, share buybacks among the world's 1,200 largest companies tripled, and last year, share buybacks hit a record of $1.3 trillion. That's almost the same amount companies paid in dividends last year. Meanwhile, over the past 10 years, dividend payments have only increased 54%. So, Scott, the obvious question here is, why are companies choosing share buybacks over dividends? But before we get to that, can you refresh our memory on why a company would buy back shares or pay dividends in the first place?
So a dividend payer, there are a lot of investors who are willing to put $100 into a stock and then wait till they sell it, hopefully, hoping to get some appreciation. There are other investors, usually a little bit older, that want dividends. They want cash flow. I'm like, okay, I've got $100,000 and I want to get $4,000 a year. I want to get some type of cash flow. I need some money to live. They like dividends. The reason why, or one of the reasons that stock buybacks have been so popular is that, essentially a stock buyback is the following. You have $100 in earnings. You have 10 shares. That's $10 per share in earnings. If you buy back 20% of your shares, you have 8 shares, it's $100 in earnings. Now you have $12.50 per share in earnings, and the stock should go up. And what that does is, for the shareholder, you get taxed on dividends. But effectively, if you're not selling your shares, it's a way of increasing or distributing capital back to the shareholder, at least capital appreciation, without an immediate tax hit. Now, sometimes they do a hybrid of that as a one-time dividend. But also, it appears the market, at least in the short term, likes these share buybacks, and it's a means of a CEO who makes most of these decisions with his or her CFO of moving the stock up in kind of the medium term, between 1 and 4 years, the vesting period of the CEO, so he or she can get their Gulfstream in their home in the Hamptons. So the controversy is whether or not there's so much money going into share buybacks. I think I read that Apple has bought back $600 billion worth of shares, which means that if Apple had decided to try and grow through acquisitions, it could have bought any but maybe the 3 or 4 most valuable companies in the world with that money. But instead, it buys back shares. The fear is that rather than growing the economy, rather than investing in new plants, property, and equipment, new hiring, you're just trying to push up the share price, which largely benefits a small group of people. I think about 90% of all shareholder equity is owned by the top 1%. And the question is, well, okay, do we have sort of a perverse incentives here where share buybacks are great in the short run for the CEO, but maybe not for the economy? So there's been additional taxation placed on share buybacks. They're talking about increasing it. But it is a very efficient way to return capital, if you will, to shareholders.
But it would be the same. It's in effect the same thing when you refer to expanding the real economy as opposed to pleasing your shareholders. Buybacks and dividends, it's effectively the same thing, right? You're just investing in returns to shareholders. You're not investing in the real assets of the business.
Well, you're giving money back to investors who then can decide what to do with that capital, as opposed to having. I mean, the question is, if you're on a board, the question you should be putting forward to the CEO is, you don't have any new ideas. You don't have any ideas on how to grow this company. We're making money, and you don't have ideas about how to reinvest. That you can't come up with any ideas on how to reinvest this money that'll get us a greater return than the S&P. And oftentimes the answer is no. We're a mature company, and we are going to buy down shares. Also, just as a function of normal business, there will be additional shares issued for new management options. So some share buybacks just keep the number of outstanding shares at parity. But there's real concern that it's just gone way overboard, that the CEO's go-to is to buy back shares because it's sort of the most reliable way for a profitable company to move the share price up. And again, it all comes back to the same place.
Yep.
Behavior is driven by compensation. And that is, decisions aren't made on what's best for the company. Decisions aren't made on what's best for the Commonwealth. Decisions aren't made on what is best for the employees. Decisions are made on what will move the stock price up in the medium term. In the next 1 to 4 years, when the CEO and the board vest their shares, right? And so most decisions are made around what will move the stock price up between now and the next 48 months, full stop.
Yeah, there's also some arguments against, which I found interesting. One is that, kind of like you say, there's this self-serving bias for the company's executives, but there's a very specific bias here, which is that if you take shares off of the market, you essentially inflate the earnings per share because the profits are being divided up among less outstanding shares. And typically executives get bonuses that are tied to increases in earnings per share. That's been one of the big criticisms, but something that I was thinking in pushback to that criticism, isn't it on the board and the shareholders to create the right incentive structures for the CEO? In other words, shouldn't they be the ones that are taking buybacks, and any manipulation that you could do to earnings per share and any bonuses that you'd get as a result of that? Isn't it on the board to figure out how to accurately compensate the CEO such that they incentivize what's best for the company?
Well, 100%. But how does the board get compensated? They get some cash and they get options. So they too are incentivized around the same thing. The question around the CEO is, how do you ensure that you have the right metrics linking to their additional options grants? And do you do RSUs? Do you do options? How much do you pay them? But, and I've always thought compensation is the hardest part about being on a board, because you try to figure out a way. Whenever you see really strange behavior at a company, you can usually reverse engineer it to compensation. So, for example, in the early days of the internet, it made sense to gather email addresses. Email was the most effective digital marketing tool, that if someone walked into a Coach store, if you got their email address and they bought something, you could send them additional offers for similar products, really high conversion. But here's the thing. The store managers weren't compensated based on e-commerce sales. So what was their incentive to try and get email addresses? Meanwhile, the head of e-commerce at Coach was not really that interested in driving traffic into the stores, because guess what? Her compensation was not based on in-store sales. So linking compensation to behavior is incredibly difficult. But what you have with boards, they approve share buybacks because at the end of the day, the board's not going to come up with a vision for the company. That's just not their job. They might advise the CEO and have some ideas, but it's really management's, the CEO's kind of vision for the company, because he or she is the one that actually has to make it happen. And if you're a company, a mature company, and you think your stock has been unfairly punished and you're making a lot of money, it makes sense probably to buy back some shares. It reflects confidence. What's really interesting is companies like Restoration Hardware have actually taken out debt. They've actually borrowed money and bought back shares, which is a really interesting play.
And you seem really irresponsible. I mean, I don't have any basis in that. It just feels irresponsible.
It's aggressive, but you could make an argument if you feel your stock is deeply undervalued and can access the debt markets. at incredibly low interest rates, which you could, 2-3 years ago. If you could borrow money at 2 or 3%, you might say, the CEO might go, you know what? I'm going to be able to grow this company faster than 2 or 3% a year. So it is, it can go very wrong very fast. And generally, I think you're right, Ed. I think your gag reflex is probably the reflex that it kind of indicates, as usually a CEO kind of controls the board. But share buybacks,
it's like desperate in a way. It's like you're borrowing money just to inspire confidence versus invest in real assets. It feels like.
I think that's an interesting and valid take. But what you're probably going to see, you might see an increase in the tax on share buybacks, because it does look as if we've entered into this kind of circular mechanism for creating more income inequality. The existing shareholders get wealthier, but the engine of capitalism, corporations, aren't investing back in "quote unquote" the real economy. They're not buying more land. They're not putting up a new factory. They're not making new hires, because they're like, at the end of the day, let's just buy back shares.
I just want to end with a case for share buybacks versus dividends, which is that the historical advantage of dividends is that you can earn some cash without having to sell the stock. And in the past, selling stock was kind of a pain. There were trading fees. The fees were especially high when you were selling less than 100 shares at a time. But now that we have all these trading platforms that have zero commission trading, and they even allow fractional share trading, it's not really a problem to sell anymore. So you can take, what's called synthetic dividends, where basically you just sell your stock in increments and you get to choose when to sell. As you said, you can also defer your tax payments. So it feels like share buybacks might be a marginally better deal if you're paying attention to the stock. And if you're paying attention to when to sell, and if you want to actively be selling your stock. Would you agree that that's a fair case?
Yeah, and it's definitely, I think that's accurate. And historically, it's been a mix in terms of returns to investors. It's been a mix of capital appreciation or appreciation of the stock and dividends. I also wonder if it's just a psychological, it just seems like dividends feel boring in this age of crypto and stocks going up 50% sometimes in a year, that investors are just a little hornier and not as excited. They don't want to marry a nice guy, right? They want something fun. They want something, I want to get rich. And a dividend, it just feels like, okay, I'm going to, turn on Murder, She Wrote, put some kaopectate on my hemorrhoids and collect my dividend checks. It just feels old. It feels, I don't know, it feels very 1970s for some reason. I don't know where I got the kaopectate, but anyways.
I think that's probably completely accurate. There are so many weird technical details over something that doesn't appear to really matter. And I'll bet you're right. It's just a vibe shift in what feels sexier as a management executive.
Do you own any dividend paying stocks?
No, I don't.
It sort of outs the company as no longer growing a little bit.
Yeah, it reminds me of Nike, which does pay a dividend, but one of the first things that you see on their investor relations page is Nike is a growth company. It's like the main message they're trying to get across to investors is we are future forward. Yeah, we pay dividend. We may look old, but we're looking at the future. Okay, let's move on to our next story. One of our biggest recent focuses here at Prof G Media has been population decline, or more specifically, population degradation. As birth rates continue to plummet, the age demographics of our society are becoming increasingly imbalanced. In 1960, people 65 and over made up 9% of the US population. Today, that number is 17% and growing. This is a global shift, and it has major implications for the economy, from social security costs to overall work productivity. And we've discussed much of this before on No Mercy, No Malice. But new data suggests there's another aspect we ought to be worried about: creditworthiness. Ratings agency S&P projects that by 2060, half of the world's national credit ratings will be downgraded to junk status if measures aren't taken to address aging populations. Put another way, extending credit to half the world's countries will be like loaning money to rent the runway. Highly risky, low guarantee of getting your money back. Meanwhile, the share of countries with double or triple A credit ratings, that is low risk, will fall from 25% to less than 5%. This is all assuming current population and policy trends stay the same, but the question remains, what are we going to do about all these old people? Scott, I'm sure you have lots of answers to that question, but first, can you explain to us how demographics impact a country's creditworthiness?
Well, in this instance, essentially, young populations are just more productive because old people want to stop working and relax, and they require more government assistance because they get sick, and they want pensions. So the ratio of young to old people is an indicator of the productivity and the economic vibrance or potential of a country. Italy and Japan have gone into population decline, and neither of their economies have really registered any growth for the last 20 or 30 years. So it is a big issue. And Peter Drucker, kind of my role model, or if I have a role model as an economist, said that every major business shift of the last 100 years can be reverse engineered to a demographic shift. And, you want to look at, there's just nothing like getting in front of a demographic shift. So I think it's a really big issue. And we're either going to have to extend the working age and figure out a way to make seniors more productive, or we're going to have more kids, or we're just going to see Western nations go into decline. And it all kind of, population decline all gets reverse engineered to sort of one thing. And that is, as women become more educated, they have fewer kids. They do the math and go, it makes me vulnerable. I go to 77 cents on the dollar the moment I have kids versus my male counterpart. Single men without kids and single women without kids, the woman makes more than the single man without kids. A single woman with kids makes a fraction of what a single man with kids makes. In other words, you just become, women have done the math. And not only that, as they get more educated, they have more professional opportunity, and they decide, I don't want to be at home with the kids. So all of these factors are leading to people having fewer kids in modern wealthy economies, and in modern economies, increasingly, the government and the tax system gets weaponized by the wealthy, who basically extract money from the young. Like, I'm old, I'm rich, I vote, I'm 55, and I'm going to make it such that I have all sorts of tax breaks for people of my generation, not younger. And then young people do the math. And in the U.S., it costs $330,000 to have a kid. And it's like, okay, maybe I make a good living, but do I want one of us to take time off work? Do we have this kind of money? No, we'll have no kids, or maybe we'll have one or two instead of three or four. And the result is fewer and fewer working age adults supporting more and more seniors. So it makes an economy less productive. It means that when an economy is less productive, it becomes less economically viable. When it becomes less economically robust, it becomes less of a player on the world stage. Its military isn't as big. It doesn't have as many diplomats. It's not as attractive to foreign investment. And unfortunately, the economies that look like they're going into population, i.e. economic decline, are the democratic ones. So I think this is, if you really want to think about long-term existential risks, there's climate change, there's the rage machine that is social media and technology, but also population decline in our democracies is a big deal. And I saw this tweet storm the other day that said just in the last 5 or 7 years, you've seen birth rates decline by 20%. And also, just what kind of world do we all want to live in? If you look at creativity, there's something about the young brain that it's too stupid to know it's going to fail, and it makes crazy genius breakthroughs in the arts and in science. The majority of Nobel Prize winners get the Nobel Prize in their 50s and 60s, but it's usually based on work they did in their PhD program in their 20s. Show me an artist, show me an amazing artist. I'll show you someone who was doing amazing work in their 20s, and then something happens and it just stops. So, and also, I just think you want youth. And I get a lot of pushback on this because people say, oh, the world is too crowded. No, it's not. You could fit the entire population of the world into New York State. And then they try and correlate climate change with an increase in population. No, that's a function of our lifestyle choices and our energy choices. So I believe this is a big deal. And I think, one, we need universal child care. We need to maintain women's trajectory professionally should they decide to have kids. And more than anything, Ed, we need to make sure people like you your age group have the same economic opportunities that I had, such that if you decide to have kids, it's not this economic calamity for you. You can actually afford to have kids. So I think this is a big issue, but I'm one of these more kids people.
Yeah. Yeah. I mean, the trouble is that we need to find more money to spend on the old people. Just a crazy statistic. The US spends 40% of our tax dollars on people 65 and older. 19% on Social Security, 13% on Medicare, and 7% on other senior benefit programs. And what this credit rating data is basically telling us is we might not be able to borrow money in order to support those people. It feels like there are three options that we have now if we're not able to borrow. One is we just somehow become massively more economically productive and create more prosperity so that we can take care of them. Two, massively increase the tax rate and then just spend more on old people as a percentage of our own individual income. Or three, spend less on old people. So right now, some suggestions are that we increase the age of eligibility for Social Security, or maybe we just flat out cut back on senior benefit programs. Aside from having more kids, where do you stand on those issues?
Well, I was all about means testing and increasing the age. And then our editor-in-chief, Jason Stavers, did the math and said it's kind of just incremental at the margin, the money you would save. Obviously,
Right.
economic productivity. I do think we need a more progressive tax structure. The real culprit here, in my view, is the tax code. And that is people immediately have a gag reflex around what you're going to take my taxes from 50% to 60 now. If you live in New York or California and you make good money and it has to all go on your W-2, you are paying a lot in taxes. I would argue it's not tax rates, it's tax code. There are 5 of the Fortune 100 that don't pay any taxes, including Nike, Amazon, FedEx. Wealthy people manage to find ways, or their representatives in Washington have found a way for them not to pay taxes to avoid taxation. Now, something like half of corporate profits from American corporations are taxed overseas, i.e. taxed at a lower rate through inversions or double Dutch sandwiches. So the tax rates are fine. It takes about 23% of GDP to operate our government. And as you referenced, about 40% of that's going to seniors. It's going to go to over 50%, which will crowd out investment in technology, investment in young people, education, that quite frankly just have a higher ROI than making sure Pop-Up and Nana can continue to take a cruise every year. So if we want to grow the economy, we just need a certain level of investment in these things. And if we want to support a Navy that scares the shit out of everybody such that we can continue to have dominance around the world, or influence, I should say, we're going to have to grow our economy. We need more investment in young people. We're just going to need more and more sustainable revenue sources, i.e. taxes. So I don't think you raise tax rates. I just think you have to get rid of these. You just have to close these loopholes. Corporations have seen their tax rates plummet. Wealthy people, at the end of World War II, the top tax rate was 92%. And every year it's gone down. And I would bet that the majority of very wealthy people pay less than 20% now. Some pay less than 10%. So it's not about tax rates. It's about enforcing the tax code. It's about having leadership that doesn't get out the knee pads every time a wealthy person comes into their office in the Senate. We have to have reliable sources of revenue. I don't think it's involving increasing tax rates. I think it's enforcing the tax code across everyone such that everyone pays their fair share, because this is what happens. Once you get above 98 or 99th percentile as a wealthy person, once you get on the gold medal stand, the government takes the bronze and the silver away from everybody else, because it's the workhorses, the people that make between, say, $200,000 and $1 million a year in ordinary income that really get fucked. I mean, they're paying 50% in a lot of parts of our nation. But once you get to $1 million plus a year and you start getting income from investments, your tax rate plummets. And then corporate welfare here and corporate tax avoidance is just totally out of control. But there's just no getting around it. We're either going to need to make seniors more productive. Maybe we do that through technology. We as a nation are probably going to need to get more productive. We probably should through technology. And we need corporations and wealthy people, to quote Bernie Sanders and Elizabeth Warren, to pay their fair share. And we need to stop this bullshit where companies can offshore their revenue and merge with a company in Norway and avoid American taxes. It's just, we have the money. 23% of GDP goes to operate our government. If you borrow some of that, that means you only need about effectively an average tax rate of 21%. A lot of people would sign up for a 21% tax rate, but here's the thing, everybody would have to pay it.
Okay, so before we go to the week ahead, let's take a listener question. We get a lot of listener comments and emails, and we actually do read most of them. We got this one after you brought up one of your favorite topics last week, Scott, private jets. This question is from another Scott in Virginia. He says, fan of all your podcasts. I can understand how owning and flying in a private jet or a PJ can be very aspirational. My question, would you be in favor of a private jet tax to offset the carbon emissions of private jet travel? Say a tax of $1,000 per flight taken or more depending on miles traveled, and the money would go towards combating climate change.
Oh, yeah.
What do you think, Scott?
I mean, in order to try and find some moral clarity. So I sold my plane about 9 months ago because it went up in value, moving to Europe, wrong plane from my mission profile. Mission profile means the trip you want to take. It's very sophisticated aviation talk that me and my douchebag friends speak to each other. But
That is very douchey. I love it.
But one of the reasons, I'm serious, one of the reasons I sold the plane is I'm becoming a little bit more thoughtful about my carbon footprint. And I thought, okay, do I really need to be spewing that much shit into the air? And 6 months later, after dealing with TSA again, I'm like, fuck that. I'm going to buy another plane. I've had it. I'm sick of pretending that I give a shit about the environment. But what I did all the time was I bought those carbon offsets, and it's not that expensive really. Like I thought, I'm all for it, and there's just no getting around it. If you have the money to fly private, you should be paying taxes everywhere. There should be taxes on jet fuel. There should be landing fees. There's landing fees on the size of the aircraft. And what's interesting is in the UK, it's much more expensive to own a private plane because their attitude is, and I think it's probably the right attitude is, look, boss, you're really rich. You're going to pay taxes. Whereas in the U.S., the landing fees and the hangar fees and the taxes are actually quite low because in America, we love rich people. So, but if the answer is, should people who are putting a lot of money, putting a lot of shit into the environment, pay for some sort of offset or pay for technology to try and offset some of that externality? 100% yes. And I still can't wrap my head around whether or not you should be doing it because I don't own Bitcoin. And one of the reasons I don't own Bitcoin is I just can't get past an artificially created store of value that is consuming the energy of Argentina. To me, that's like, okay, how is that a good thing? And at the same time, I want a private plane. So try to square that circle. But yeah,
well, at least the private plane you can use to travel. But yeah,
the argument I make around owning a private plane is very basic. I have a finite amount of time on this planet. I spend 17 days a year at home that I wouldn't be able to otherwise if I have a plane. 10 years more with my kids, 170 days, 5.5 or 6 months. At the end of my life, am I going to want the money back or the 170 days with my kids? So if you have the money, it is the ultimate luxury, but there's just no getting around it. You expectorate something like 10 times the amount of carbon than people who fly commercial. And we should absolutely play not only a replacement, but a pretty serious penalty for making that decision because there's just no getting around it. It's great. It's wonderful for me. It's fun for me. It improves my lifestyle now. But these types of actions are going to have impact on future generations. So I'm all about tax me and my big fucking Gulfstream. Hello.
By the way, was there a big tax you paid when you bought the plane? Was it more than buying any other asset?
Again, see above. America loves rich people. I think you take delivery of the plane in some low tax state, and then there's all kinds of shit you can pull in the U.S.
Yeah. And Trump got rid of taxes on used jets or something of the sort, I think.
Well, I'll go one better than that. Last year was 100%. This year, if I buy a plane this year, say I spend $20 million on a plane, I can write off 16 million of it. I can write off 80% of it in 2023. So say you have a big gain, a big stock gain, and say you made $16 million. If you paid long-term capital gains on it, right, you owe, say you live in I don't know, a high tax state, you're paying 35% on it. So you would immediately pay $5 million in taxes. If you buy a plane for 16 million or 20 million, you can write off 80% or 16 million. It wipes out your $5 million tax liability. Yeah. And granted, when you sell it, you'd have to do recapture, but let's be honest, that makes no fucking sense. Who buys private jets? Really, really wealthy people. Who are the last people that need those sorts of tax deductions? Really, really wealthy people. So see above a regressive tax structure that favors the rich. And I want to be clear, I'm going to take it if I do it. I'm not going to disarm unilaterally. Yeah. And they will argue, well, it's good for Gulfstream and employment in Savannah, Florida, it creates American jobs, blah, blah, blah. Yeah, but at the end of the day, it's another example of how we are crowding more and more income, and not even to the top 1%, but the top 0.1%. So, yeah, stop me before I kill again. We should absolutely restore some sort of progressive tax structure, and the economics around private air travel are one of the many places we should start.
All right, thanks, Scott. Let's take a look at the week ahead. We'll see the personal consumption expenditures index for April. We'll also see earnings from Nvidia, Zoom, and a slew of retail, including Lowe's, Best Buy, and Urban Outfitters. Do you have any predictions for us?
Couple of predictions unrelated. This Montana ban gets overturned right away. Pure posturing. And also, I do think Senator Feinstein's going to retire. I think this has become just almost, she's essentially, this Senator Feinstein is a lion of the Senate, assault ban, an assault weapons ban, releasing data on torture that was really important in terms of the U.S. facing up to what it had engaged in. She's just been incredible. And this is unfortunately ruining her legacy. And at some point, someone she listens to is going to say, okay, this is in Charles Schumer, or they're just going to start taking things away from her, because they all want to be respectful, but our ability to get Democratic judges put in seats is being held up. It's getting really bad. Anyways, so in Montana, we're going to see the TikTok ban overturned immediately. While I still am hoping for federal legislation, specifically the Restrict Act, goes into place, and then it gets spun. And two, I do think Senator Feinstein is going to retire in the next 30 or 60 days. Thank you for watching this edition of Prof G Markets. Please like, subscribe, and tune in next week.